From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
Welcome to Money Talk for June 19th, 2026. Let's see what's happening. Your Milwaukee Brewers are in Atlanta, then off to Cincinnati before they come home for a huge series with those Chicago Cubs. That's happening next weekend. And may I remind you, only one more shopping day till Father's Day. All you dads can thank me later. Well, the world's biggest music festival, Summerfest, got underway yesterday, and it'll be rocking for the next 3 weekends with lots of something for everybody. Well, I can say I recognize two of the headliners, Styx and David Lee Roth. Yep, I'm that old. Hey, it's senior prank time. The Stanford graduating class will be hard-pressed to outdo last year's prank. Multiple seniors dressed up as the dean and then took to the podium. It took a while for security and fellow graduates to sort out the fake faculty from the real dean. But no harm, no foul. And finally, this past Monday, Donald Trump casually announced that an unnamed new drug can bring patients back from the dead. And no, I didn't make that up. On the podcast today, we have our Rothschild, Steve Giles, Mike Hoelzl, wrapping up the week. Here's Kyle Tetting.
Well, thanks, Max. The market overall had a decent week. Nasdaq up 2.4% this week, up 629 points, closing at 26,518. The S&P up 0.9%, closing at 75.01, back over 7,500. The Dow Jones Industrial Average added 0.7 after 72 points on Thursday in a Juneteenth shortened trading week. For the year, the Dow up 8, the S&P 500 up 10.1, and the Nasdaq up 14.4, including dividends. Art, I think it would be difficult not to start with you and highlighting your prognostication powers. You pointed out in particular, I think kind of the big item for the week, the Fed. You pointed out exactly what we should expect from Warsh, exactly what was coming. What did we learn this week as we kind of digest news from the Federal Reserve?
Yeah, I had the pleasure of watching him give his first comments, as the chairman. Last week, the speculation was, what was he going to do with the dot plot? Was he going to put a dot out there as far as his predictions for where interest rates were going, et cetera? Or wasn't he? And if he didn't, would he say that he did or he didn't? Was he going to talk? Was he going to hold a news conference? And even more importantly, how was he going to comport himself? This was kind of a political appointment, so it would appear, or so it was politicized. And I have to say, I was very impressed by his comments, the way he carried himself, the way he is very professionally going about this job. This is the second time that Trump has appointed someone who was pretty darn good. Powell was tremendous, despite the criticism from the president. And Warsh, I think, has the makings of becoming a great Fed chairman. The things he said differently, he didn't want to have the Fed lead, the prognostications. He wants the market to kind of read the tea leaves. And the market went down as he spoke that day, thinking, he's indicating he's going to raise rates. And I don't think he did that at all. So the next day, the markets woke up and figured, wait a minute here, maybe he's not going to raise rates. And I think that's exactly what he wants. He wants to keep the markets in suspense, and he wants the Fed to be able to interpret that. Furthermore, as you pointed out in your show notes, these committees he's putting together are going to provide perhaps new ways of looking at things like inflation and new ways of, maybe new tools to combat inflation. So I was very encouraged by it, and I was thrilled that within a couple of days the markets, figured it out.
I thought his comments were a little slick in terms of, we talked about it previously, he was put in by Trump to really raise rates, but now the Fed's coming lower rates. Yeah. Thank you. It's Friday afternoon. I'll get there eventually. To lower rates, but it seems like there's a good chance they're going to raise rates before, and he didn't really say anything about that because, as we talked about before, he's in a tough position because the guy who appointed him has said, I put you there to lower rates. But when he said, "Oh, I'm just going to defer to the committee," or I'm paraphrasing here, basically, he kind of backed away from not saying he's going to raise rates. He's just going to let the numbers speak for themselves. So I thought he did a pretty decent job there of threading the needle instead of coming out and saying, well, we're just going to continue with our plan and we look forward to lowering rates, or something along those lines. So I thought he kind of, again, threaded the needle pretty well, kind of boxed in a little bit as we talked about last time.
It is interesting that it is a political appointment. It is serving at the mercy of the president or serving at the president's pleasure. You are appointed by the president and confirmed. And I think there is a tendency to look at those kinds of appointments and go, well, this is a Trump person or this is an anti-Trump person, depending on who put him in and why they're there. I think from an outsider's perspective, and that's really what we are here, I'm going to give him the benefit of the doubt that he's qualified for the job, that he wants the right things for the Federal Reserve more broadly. He's saying the right things so far. It is a departure from what we got previously, in part the desire to not provide that forward guidance that so often we have come to rely on. But he's not telling the rest of the Fed they can't do it. The other Fed members certainly gave their projections. And so I think my 2 cents for right now are that I'm going to give Warsh the benefit of the doubt that he's going to do some things differently, but that at the end of the day, the mandate is the mandate. Full employment, stable prices. And if we can get the focus on stable prices, which Warsh made clear in his comments that that's what they're worried about right now, then I'll reserve my judgment on his tenure as chair of the Fed until a later date in which he proves that he's either qualified or not qualified. And we won't tie it to the president that appointed him or the political environment in which it happened. And I think that's probably an important point for most people with respect to what the Fed is doing. At the end of the day, they are supposed to be driven by those two forces, not by who ultimately put them into power. And I am encouraged by some of these committees that have been formed to explore how and why the Fed does what it does. Yeah, okay, we do need to be introspective from time to time. I worry if you start those committees with preconceived notions about what the outcomes will be. And so I will be interested to see what comes from those meetings, what comes from that introspection, if it is only to serve a higher question that's already been answered in the minds of other people. But again, that hasn't been what we've seen so far. We have seen a chair that's been clearly much more reserved in his bowing one way or the other to the political landscape that's out there. And we also got news this week on a deal from Iran, which moved markets. Steve, as you have kind of navigated with clients this week and over the span of this year, a war with Iran that clearly has weighed heavily on expectations for inflation. The Fed addressed that, but also has weighed heavily on markets. How do you help clients kind of navigate these competing interests of, well, there's some really bad stuff that's going on, and yet markets seem to be doing okay?
Yeah, what an interesting 6 months we've had, certainly starting the beginning of the year thinking that the Fed would be lowering rates only to do a 180 once Trump went into war with Iran. Markets sold off in March, only to come roaring back in the second quarter. I think for investors, it's a wonderful reminder of the importance of a couple of things. Not trying to time the market, making sure you have the right balance to start with, and then just sort of trusting the process as you go through that. A lot of the conversations that I've been having with clients is really just focusing on the fundamentals. The market is going to respond to earnings and interest rates, and the stuff going on in Iran, while it was global in scope and caused the market to have some short-term knee-jerk reactions, I think longer term there's some optimism now that we've got this memorandum of understanding that we'll be back to focusing on the fundamentals for the second half of the year, Kyle.
Yeah, it is about earnings and interest rates, the interest rate piece, hopefully a little bit more stable from here. We've seen a bit of a jump higher in rates at points in time when inflation was the problem. Again, with the Fed giving us some confidence that they are going to navigate this in the appropriate way for now, well, the interest rate piece may be much less of an issue, and we've had this great kind of environment for earnings and an expectation that the earnings growth this year remains quite strong.
Yeah, even for the second quarter, we've got a forecast of 22.9% growth. That on the coattails of what was a fantastic first quarter earnings growth rate of over 29%. I think for the year, we're looking at around 25% in earnings growth rate. This could go down as an outstanding year, and you're only seeing these earnings growth rates because those are actual real numbers that are being reported in the first quarter. These aren't forecasts from the first quarter. Those are on the books. And that continuation and carry forward into the rest of the year is in the face of higher inflation. I do think it's interesting that Americans in general are really, really good at a couple of things. One, spending money. We're just consumers. But two, complaining. So to the degree that if we're able to spend money, and even if we're spending more money, we'll just complain about it, and we feel good complaining about how much we're spending, everything's going to be okay because we're all in the same boat together, so people can empathize with that.
I'm going to complain right now. No, I'm putting me down in the vote of having a little bit of skepticism about the memorandum of understanding. And folks, we need to shorten that up a little bit. There's got to be something tighter that we can say for that. Just because there's been so many false proclamations and false starts with this, and who knows what's going to happen. I hope it does, but I feel like a lot of people that are just so all in on, yep, this is it, it's over, we're all good. You're basically just Charlie Brown trying to kick the football. There's a very good chance that this blows up still. I'm not saying it's going to, but as someone who grew up fairly jaded, I'm going to kind of I'm just going to be the jaded one here and say I'm not going to believe it until I see like an extended amount of time that has passed from the signing of it until whenever at this point.
Oh, Mike, those points are all absolutely valid. And I think a lot of people here in the U.S. Take the fact that we have two giant oceans on both sides of us for granted when it comes to global affairs. And what has been happening in the Middle East with the Strait of Hormuz has been a global issue. Like India hasn't been able to get oil. Japan hasn't been able to get oil. And that's affecting the global economy. There are a lot of countries out there right now that are wondering the same thing you are. How is this going to play out? And, the ink's not even dry, but we'll believe it when we see it.
I'm going to be a little optimistic here. This war never should have started in the first place, and it could flare up again. But to the credit of this president, he's halting it or putting a hold on it for the time being to avoid that global crisis. I mean, yes, we're on the precipice of a global crisis, but we haven't gone over the edge yet. So I'm going to be cautiously optimistic about the end of the year. He needs it for political reasons. He had to do what he did. It was obvious. We predicted that a week ago as well, but it wasn't that difficult to predict. I'm going to suggest I think it's going to be successful, even if it flares up a little bit. And I'm going to suggest that Israel right now and its problems with Lebanon, that's the biggest powder keg right now. And so if the president can cajole, Israel into stopping its bombing in Lebanon, I think there's a possibility that we could have a new era in the Middle East. And this spending, all this free money we're giving Iran, well, we bombed the heck out of them, in the president's terms. And that could provide further global growth once things settle down. So I'm cautiously optimistic about this deal, despite the fact that I thought the war was stupid.
What I appreciate about this conversation is I think all four of us sitting around the table, all six of us in the room, can have slightly different opinions on where we are, where this is going, how we got there. And then we can look at portfolios and how we invest and go, but there's a reason we picked the path we picked, right? We talk to our clients every day. We look at what is it that you need and how do we best get there, because we all know we're going to be wrong at some point in time. Sometimes we're going to be way wrong.
Speak for yourself.
Thank you, Mike. But more importantly, we know that a lot of the time we're going to be right. And we know that a lot of the time good things are going to happen. And so that cautious optimism, Art, that you point out, alongside maybe a healthy dose of skepticism, a healthy dose of being jaded, it's how we've chosen to invest. And I think at our core, it's who we are as investors. We are equal parts optimistic and jaded. We are equal parts excited about where the future takes us and concerned about the things that might be out there right now. And it's why that balanced portfolio is such an important part of what we do. You can't get the gains that come from being optimistic if you're constantly afraid about the short-term things that might disrupt the portfolio. And the only way I know to give you confidence to get you to that future is to build something that's designed to withstand it. And so I think this is the perfect example of why we do what we do. This is the problem today, right? Whether it's Iran, Lebanon, Israel, whoever you want to blame or wherever you want to place geographically that conflict, yeah, that's the issue today. And tomorrow it will be something else. And how do we get past that to all the opportunity that's out there? Because meanwhile, the earnings growth is 20+% this year. Meanwhile, stocks are up 10% this year. Meanwhile, there are all these great things happening, and they happen right alongside all that terrible stuff. We did get a little bit of economic data this week, although the real focus was on the Fed for the most part with respect to the economy, but a report in particular on retail sales. And I pointed out because consumers in our country really are the driving force at the end of the day. And retail sales fairly strong in the month of May. I chalk it up in large part to an increasing size in our country of the upper class, that there is this immense amount of high net worth individuals in our country, this immense amount of spending that can take place. I saw a number today that 736,000 new millionaires were formed in 2025, and the net worth on high net worth individuals' balance sheets is now north of $30 trillion. Well, that's a lot of money to be spent, a lot of money that can be spent, and in a country that is so driven by consumer spending, that to me is the thing that says, hey, there is some stability beyond this economy, even if we are dealing with all those problems.
For years, companies weren't spending enough money, so capital investment was just ridiculously low. Now those wealthier companies are spending tons of money, and the wealthiest people in this country, there's more wealthy people, as you just indicated, and they're spending more and more money. There's an article in the paper recently about Vegas. They're relying on these high rollers because the people who used to come for the free buffets can't afford to get there anymore. So these people are spending more at the high-end restaurants. And
I'm going in 2 weeks. I'll give you a
there you go.
Report.
There's money big time. Welcome to Vegas. But again, now with this war, at least hopefully on pause, you're going to see more spending, throughout the course of the summer. And quite frankly, with oil prices going down, we might see lower interest rates instead of higher interest rates because we might see declining inflation rates. It's possible. And I'm sticking with this cautious optimism at this point in the middle of a good year.
I think that's an interesting comment, Art, because it does bring it all the way back to what we started this conversation about regarding the Fed being a bit more cryptic in their guidance. And if the market sees oil coming down and that is something that can help rein in inflation, does the Fed really need to act? So why project what you're going to do if the market can do it for you?
I think all good points, all a good reminder of why it is we do what we do. A beautiful summer day out there, plenty to go do and see this weekend. We enjoy you listening in. We enjoy doing the program for you. We will talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.